Hello traders. Last video I talked about volatility and predicting volatility using open interest. Today we're going to add one more component to that strategy so that you guys can become really good volatility traders. The reason I've been talking about trading volatility long short a lot more often has been, to me, I think it's a far more profitable thing to be doing than to be like trying to judge where Bitcoin goes. That's just my opinion. You're entitled to your own, but I'm going to show you guys some ways to predict volatility. So open interest is great, but what I've found is open interest to market cap ratio has been very helpful for predicting when big moves are going to happen. So what this basically says and what these values represent, when this is at 3, that means that 3% of the market cap is basically the same value of open interest. So imagine that the market cap of Bitcoin is, let's say, I'll throw out a number, $1 billion, okay? 1 billion. If this is at 3, that means that the open interest is at 30 million, okay? Because that would be 3% of 1 billion. So basically, when this is very high, that means that a lot of futures traders have positions on high risk, lots of probable volatility, right? When this value is very low, that means that there's just not as many futures contracts, not as many futures traders speculating on Bitcoin, not as much liquidation potential, not as much quick volatility that we can really get. So a good strategy to do is typically you want to sell volatility, short volatility, when this level is very low, and you want to buy volatility when this level is very high. Let's go over how. So if we look here, like right down here, you can see that right after this move in, the beginning of October, this level was so low. This means that there's just not that many futures traders on Bitcoin. And over the period of a few days, Bitcoin barely moved. I mean, this is nothing. This is such little movement. Shorting volatility would have been absolutely phenomenal. Then what we can see what happened is, had you shorted volatility all around here, you would have made money. That's pretty obvious unless you shorted at a very bad level. Then when we get a large jump where a lot of futures traders began taking positions, i.e. an increase in the open percent market cap ratio, this would have actually been a great time to have bought volatility. So a great measure of volatility is the 7-day tracker of Bitcoin volatility from BitMEX, BVol. And as you can see here, had you shorted volatility on October 1, October 2, which is around here when the ratio was very low, I mean, you would have been very happy because look at that. Volatility just falls off a cliff. The BVol went very low. That's amazing. Anyone who sells volatility wants to see this, like they want to short, any kind of volatility contract and then have it go, to the ground, of course. Then let's go look at what was happening a bit later in October when volatility began to pick up. We can look at October 12th and October 25th. Let's start with October 12th at volatility. So what we can see is, do you see just how high this indicator had gotten? Look at this. It was trading at about, the ratio was about 2.4, 2.5, not that high relatively. This is all relative. You always need to make sure it's always relative. This went to 3%. That means that a large amount, more of the market cap of Bitcoin is now basically not. I'm not saying that the market cap of Bitcoin is open interest. Those are two different things, as you should know. Those are two different things completely. Market cap is from supply and owned tokens, owned shares, of the supply. But futures is a contract between two parties, and that could be any amount. It could be 100 times the market cap. We've seen that before. It could be 0.01% of the market cap. But when this goes from 2.5 to 3%, at this point, buying volatility would have been so good. And yes, buying volatility would have paid you a lot of money, obviously, if you had bought it here for maybe like a 7-day out contract or even just a few days out, you would have made a lot of money. But the reason you would have, known that is because this level was so high. And you can see that on October 12th, volatility exploded higher. That would have been great. Now let's look at October 25th. It's a pretty similar situation. You can see more spikes in the ratio, which are just great times to buy volatility. Again, had you bought, let's say you had bought a put and a call, so you had bought a move contract, a straddle. This would have been a great time to have bought a straddle because what ended up happening is price just, went higher and did not go lower. It didn't even come back to the strike price. Had you bought let's say you had bought a call and a put at 19,000, I mean, even 2 or 3 days out, you would have made a lot of money. And how would you have known that? Well, a spike in the ratio, in the open interest to market cap ratio, indicating that there are a lot of futures traders speculating, indicating the volatility is likely going to be rising. So that would have been great there. I do want to move on to other indicators. Yeah, another one would have been 8th of September, which I'll bet you, yep. And right here you can see that there's a very elevated open interest market cap right around here. Really, anytime this spikes and stays high, that's just a great time to buy volatility. Like right here, you can see that this level was super high after this move, and then it created a Bart-like move because there were just so many traders with contracts on. And yeah, price fell. All right, let's move on. So trading Bitcoin volatility is quite easy. Not easy to make money from, that's not what I'm saying. Easy in the sense that there are a lot of venues to do it. It's a little bit harder to do that with smaller altcoins, but with a big altcoin like Doge, it's actually not too hard. I think there are plenty of platforms that do offer volatility on Doge. HXRO is one of them with TixWix contracts, and I think other platforms too. I think Delta? No, probably not Delta. But yeah, you can see here that, I mean, volatility has been insane on Doge. So really any kind of volatility-based strategy would have been perfect here. What do we see here? Well, what we see is if we look relatively, and the best way to be relative is to go zoom out immensely, really not that many futures traders on this asset. This would mean that I'm not expecting a lot of volatility on the asset, okay? But what do we see? Well, what we see here, obviously this would have been a great time to have, predicted things to go crazy because they did. But when this began rising above, historical levels like right here, when this had gone even above 3%, I mean, it would have been a great time to have bought any kind of call or put or move contract for Doge, of course, because, had you not bought the contract, but predicted a lot of volatility at, let's say, when this was at 3%, I mean, price just is all over the place. So yeah, you can see this is a great volatility indicator, not just for Bitcoin, but also for, assets like Doge. Now let's look at Band. This one's absolutely insane. And to just show you just how volatile this asset's about to be, I don't even know how to put into words. Basically, in 100 means that the open interest of this token is the same as the market cap. That's crazy. That means that basically if in real life or, in spot markets, if traders currently hold $200 million worth of this token at its current value, open interest, there's also $200 million worth of contracts of open interest on this. I mean, it's just primed for a lot of volatility. Volatility doesn't mean up or down, as, options traders will tell you. It can mean up, it can mean down, it can mean up then down. No one knows. But just to show you just how crazy this volatility is, I mean, I don't know why so many futures traders are now on Band, but if there's any way to buy volatility on Band, I would be buying it in droves. Even if it was a contract that was quite expensive, I would actually still want to buy it. Even a contract that would be maybe like a straddle of, let's say, a combined straddle long price of $1, I would even want to buy that at, like, let's say 2.5, basically betting the price will either be below 1.5 or above 3.5. I mean, that would probably be profitable if that contract was more than a week out. I mean, there's likely to be a lot of volatility here because there's just so many futures traders on this asset. So if you're trading this directionally, be very careful because this thing is going to just be, doing probably one of those two things. So yeah, but all in all, if you are interested in trading volatility, I have a course that shows you how to do that, my options course. Really good way to make different kinds of income than just, speculating on whether price will go up or down. This is a little bit, I think, simpler. Maybe not easier, but simpler. Harder to learn, but simpler to execute. Basically, whenever we see a lot of risk, i.e. the market cap, the OI market cap ratio gets really high, we expect that shenanigans are going to happen, and shenanigans typically do happen. That's when you get Bart-like moves. When no one is on futures contracts, i.e. this ratio is very, very low, I just don't expect a lot of volatility until a trend begins and we see a pickup, an increase in that ratio. So that is going to do it for this video. Yeah, you can see over time, I mean, now it's probably a much better indicator than before, but you can see over time that whenever this indicator was quite low, there just wasn't that much volatility, i.e., you know, here, there's just like no volatility at all. But when this ratio was really, really high like this, I mean, there's just too many futures traders, and goodbye futures traders, you know? So, you know. So that's going to do it for this video. I hope that this was helpful. To me, it's something I do every single day to measure how much volatility I think I'm going to see on Bitcoin and on other assets. If you're trading something that is incredibly volatile, such as Band right now, lower your leverage. Be careful, because that coin is going to explode higher or explode lower. And if there's any way to long volatility, I'll do it. Happy trading.